Okay, so thank you for being here today, Killian.
It's a pleasure as always to be here with you.
So first of all, I guess if you could introduce yourself, talk a little bit about yourself and your career.
Yeah, so name's Killian Charles, President and CEO of Brunswick Exploration. We just put out a major resource estimate today for our Mirage asset in Quebec, 52.2 million tons at 1.8% lithium oxide. I myself am a geo by background, spent some time in capital markets. Since then, rejoined the corporate side, worked with Integra. Then I joined the Osisco family, starting with Osisco Metals. And about 4 years ago, I guess 5 years ago now, started Brunswick Exploration along with some of the other founders of the Osisco group that we've pushed into the largest lithium exploration, one of the largest lithium exploration companies in the world, definitely the largest on the grassroots side.
We'll speak more about the resource that you released in a minute, but first of all, if you could summarize how you would say that Brunswick Lithium, stands out compared to other junior explorers and developers, especially in the lithium space.
Yeah, look, I mean, our focus and what allows us to stand out is the fact that we want to do exploration. We don't shy away from it, we run towards it. And I know that sounds a little bit silly, but it's something that we find is a little bit of our expertise. It's what we want to do and what we like to do. We have explored across all of Canada, launched one of the largest programs, made significant discoveries, of which some of them are now reaching that resource stage. We're drilling multiple assets in our portfolio. One of them is right next to Rio Tinto in Quebec, 20 kilometers away, where we drilled what's actually the third best hole of 2025 in the lithium industry. So, pay attention to that one when we go back to drilling it. But we're also present on an international stage. If anyone ever reads about lithium in Greenland, it's because Brunswick put it on the map. And now we're even pushing further afield by going to places like Saudi Arabia, the first company to do systematic lithium exploration work in Saudi Arabia. And it's always about leveraging that exploration expertise. It's about making us as exciting and focusing on the most exciting part of the Lassonde curve, which is making discoveries and growing them. And that's our bread and butter inside Brunswick. That's what we do better than anyone else out there.
So I guess first of all, so you released your MRE, 52 million tons or 52.2 million tons at the 1.08% lithium or lithium oxides. Could you walk us through the resource at Mirage?
Yeah, it's a fantastic achievement if we take a step back and realize that we pretty much did the entirety of this resource estimate during a bear market. The drilling we had to do, the financings we had to push to get it to where it is right now was done during a bear market. And so to come out of this exercise with over 50 million tons, which is for us just the start of what we believe we can do. We've only drilled 23 odd thousand meters into this asset. And when you compare it to its peer group, other companies with similar size asset, they've drilled 50, 100, 200% more than we have. And we know that if we take the time, put the work and put the meters in it, we'll get there. And that's underscored by a further exploration target, which is, in the same area as the resource. It's additional holes that were too far to be captured into the current resource estimate. But we have another 40 to 50 million tons grading between 0.08 and 1.1 lithium oxide. It's just extra things that we can go get in that same area. So having that 52 million tons, demonstrating that if we do more work, we can potentially capture any portion of that 40 to 50 million tons. It starts to speak of a very sizable asset, and one that, in my mind, compares very well to its peer group.
Perfect. And how does the grade compare roughly here?
I mean, the grade is going to be sizable. Pretty much all the lithium assets worldwide, the real ones anyway, are going to grade between 1 and 1.5%, right? So we're smack there, kind of in the middle. If you look, we've even presented a few different cutoffs. If we come down to 50 million tons, we're up to 1.1%. So we're really much in the mix alongside everything else. It's not so much the grade that one has to focus, but the size. What matters in the lithium space is scale. You have to demonstrate scale. And that's what we wanted to demonstrate more than anything else. This is a large asset. This is an asset that can continue to grow, that is near surface. Over 70% of the current resource is, within the first 150 meters in only 5 dikes. It's, usually these are it's a dike swarm, and they're within just 70% of the resource sits within 5 of them. So it's something that is well constrained, well mineralized, close to surface, potentially easy to mine. That's every checkbox that you want to tick for a real asset that has the potential of being a mine. Well, Mirage comes up against that list, and we check every single box. So it's very exciting times inside the company as we've just released that estimate, and then knowing that there's still so much more we can give around it.
Is it one pit shell that you have, or is it multiple pits for your 5 dikes?
You know what? It's encapsulated mostly inside one. It's a large pit that covers a fair amount of surface area. There's, we'll say, a sort of an arm, or there's another one a little bit further to the south and another one further to the north. But majority of the mineralization is contained into one large pit. And you have to understand that the ones that are contained a little bit further to the south and the ones a little bit further to the north, there's this high likelihood that as we continue to drill, we're able to find mineralization and connect it to the single large pit that we have in the core part of the asset. So again, this is part of that 40 to 50 million ton exploration target, is sort of closing, if you will, the gap. That entire resource is constrained to about call it 1.5 kilometer by 2.5 to 3 kilometer rectangle. And that's where both the 52 million ton and the exploration, the 40 to 50 million tons and the potential additional tons we can go capture sit in. So it's a well-constrained area that can grow quite significantly. But to your point, in terms of future mineability, I think it's going to be reflected quite favorably as this asset goes through the development time frame.
You showcased tantalum, or Ta5 oxide. What is that? Is it marketable?
So you know what? Tantalum is a very interesting thing, because the recovery of tantalum is, for most lithium assets that are hard rock, relatively simple. It's, high power magnets that are just sort of sitting on the sideline capturing some of this material, and or vice versa, just going through the a density contrast. So it's something that is typically very easy to collect. Once you start to get into 100 to 200 ppm range, it is definitely economic. I don't attribute a large value to it. The real value of the asset is in the lithium. The way we see it, it's a freebie. We're going to be mining lithium there one day, or we hope to mine lithium there one day, and we'll collect some tantalum on the side. Obviously, some parts of the deposit are richer in tantalum, some are lower grade, but ultimately it's a nice thing to have on addition, and it speaks to a good system, right? This is a predominantly spodumene mineralization, which is exactly what you want to see, which is why we've, when the metallurgical work that we've done demonstrates that we can produce good, high quality concentrate from potentially a DMS only circuit. Again, that speaks to a high quality resource, right? A high quality grade, a high quality tons across the entire project. So, again, it goes back to potential pitfalls, things that you want to avoid, and potential resources. And Mirage has none of those. Mirage has everything that you want to find, right? So that's what's very encouraging in this, and really allows us to continue growing this particular asset into the future.
You use 70% recovery rate. Could you talk more about the metallurgical test work that you have done, and also what potential there is for improvements in the future?
Yeah, so look, we did a first pass metallurgical results. You have to remember that when it comes to lithium, not to say that it's easy, but it's a little bit different from gold, it's different from copper. It remains a bulk commodity. So from that perspective, you want to make sure that you have a very low cost, high efficient flow sheet. All right. What we're seeing here in this project is that it is amenable to a very, very standard flow sheet, potentially DMS, dense media separation. That means it's a mechanical separation with no real chemicals involved, which has a huge impact in terms of mine tailings requirement, which has a huge impact in terms of capex, because it could be that you only need half your mill. Instead, you may not need to grind the ore, you may not need to do flotation, on the basis that you lose a little bit of recoveries. That's the caveat, right? If I do flotation, I can get higher recoveries. So it's always going to be, choosing what's best for the project and where we believe there's the most value that can be gained. But importantly, what we have is that ability to choose, right? If I feel that it's more important to save on capex than it is on, than to have high recoveries, then I can do DMS potentially at Mirage. Vice versa, if I want to maximize revenue and ensure that I have recover the largest amount of lithium, then, well, that's fine. I again have that flexibility. This is the exact type of ore that you want to have. One that is fully flexible, that can go into any circuit, that doesn't require a complicated flow sheet. That's simple. That's what it boils down to. You want simplicity.
What is sort of, high and considered low recovery rates in lithium?
So it depends again. Are you doing DMS only? Are you doing DMS plus flotation? Are you doing flotation only? Typically, when you're doing DMS only, you want to show recoveries that are between, call it 60% and 72, 73. That's usually the spectrum you're going for. DMS plus flotation and flotation itself, you should be seeing recoveries between 80 and 85%. And wouldn't you know, that's exactly the recoveries we see for Mirage, both on the DMS only side and the DMS plus flotation. We're right in both of those considered classic ranges. Of course, we'll do more metallurgical work. There's a lot more steps that need to happen here to better categorize the ore body, to do, or I should say the deposit, to do all of the work around it. We will do all of that, but already at this stage, we're seeing that the project has no red flags, right? At least for us internally. And that's very important from our perspective.
Let's talk a little bit more about the potential. You have outlined 40 to 50 million tons, or 40 million tons to 50 million tons of exploration potential or exploration targets for 0.8 to 1.1% lithium. How do you motivate that?
Yeah, so what happens is that once you're making the resource, and I'll simplify this because it's not exactly always that 100% of the time, but what will happen is that we'll drill a particular area and we'll particular dike, and drill spacing is up to a maximum of 150 meters, right? So the maximum spacing we can have between two drill holes at 150 meters. And sometimes what we'll have is we'll have certain drill holes that fall outside of that maximum range, where we can still see the pegmatite. Well, it's a little bit too far. So that additional material falls in that exploration target. So it's a question of just coming in, tightening up a few areas around the project, making sure everything is well drilled off, and then we'll be able to convert. Obviously, the reason why you see a range in grade is because it's hard to predict. Pegmatites can be variable. They can be richer. They can be lower grade. That's all fine. We're feeling very confident that we can convert a significant portion of that 40 to 50 million tons at a significantly good grade, right? So there's a lot of upside here, but beyond that, right? That's the 40 to 50 million tons in that, remember, that rectangle, that 1.5 by 3 kilometer rectangle. But there's more than that, right? We have pegmatites that are mineralized with spodumene up to 3.5 kilometers away from the boundaries of the pit shell. Those need to see more work. We put one hole into it to confirm it's there, but we didn't have time to do anything else last year, back in Q1 2025. We want to go back in 2026, fully delineate the potential, because imagine if we have another center 3 kilometers away. This is completely open. And if you look at other sizable assets across Quebec, take an example, Patriot Battery Metals. I mean, if you look at their main deposit, it has one big pegmatite, CV5, and then 5 kilometers away, there's another pegmatite, another 5 kilometers away, there's another big pegmatite. There's nothing that says that can't happen at Mirage itself. Already we're starting to see that same potential, knowing that there's pegmatite some distance away. So we have a major program planned for the second half of this year where we want to capture that potential. I mean, we want to demonstrate to the market just how big it can be, not only from the exploration target, but from the rest of the property itself. There's so much more we can do on that front. And that's what makes it very, very exciting, that even if we were to somehow convert 100% of the exploration target, it's still not over. There's even more that we can do across the project, right? And that speaks to a very sizable asset, and an asset that can generate a lot of value for Brunswick and its shareholders for years to come.
Yeah, by the way, I also want to comment. I mean, there isn't a lot of variability in this resource when you flip around a little bit with the sensitivity. If you have 0.4 or 0.6 instead of 0.5% lithium, it's not much difference in grade or resource size, really.
No, and it goes back to the fact that 70% of the resource is held in 5 dikes, right? So, there's a good chunk that is not really moving. And all you're kind of doing is playing on the margins. Oh, well, maybe I can go capture this little small dike on the side that's a few meters away, or maybe I don't put it into the resource. And again, that's the sign of a good project, right? Where you don't want to see crazy variability. That means that doesn't really matter what happens in terms of the cutoff. It stays the same. So the lithium price can go up or it can go down, and it won't make a difference. It will still stay very good. The resource will still stay where it is. And that's a good sign to us. Like, that's what makes us very excited to continue doing work at Mirage.
Now with the resource, what are the next steps in terms of advancing Mirage?
Oh, we have a lot of steps here. I mean, for sure, we're going to go back to drill. There's a lot more work that we can do there. We have, a major soil and till survey to do across the entirety of the project, because for us, more than anything else, all right, and I say this almost in a friendly fashion, but this resource carries a little bit the scars of the bear market, right? Where we were never able to fully demonstrate the potential. What we've done is astounding, right? It's great to have 50 million tons, have that exploration target, but there's more. And so more than anything else this year, we want to show, hey, look, this is everything that's out there. This is the entire potential of the project. This is how big we can think it can get. So we have a major soil and till program. We have more geophysics to do across the rest of the project. We have a drill campaign that will be going back there. It's not meant to do infill drilling. It's meant to grow it as much as possible, to drill these new targets, to show the full potential of this asset. That's what we are looking forward to at Mirage. We're hoping to kick that off in early Q3 of this year. It's not to say we're not going to be doing anything, because we're about to launch a drill program next month in February at our Anatacau asset, which is right on Rio Tinto's doorstep. So that starts very, very soon. And that's going to go pretty much until late March, early April. So, you're looking at a company that is going to be extremely active across its portfolio, going from drilling at Anatacau to drilling at Mirage, all within the next 6 to 7 months, on top of starting new programs in Saudi Arabia, and then hopefully in the second half of this year later, drilling in Greenland, right? This is what we do in Brunswick. Remember when I said what separates us from a lot of other companies? It's by being active. It's by having so many different opportunities, so many different ways of generating value to shareholders across the entirety of our portfolio. That's what separates Brunswick from everyone else.
Sometime in the spring, you will start the drill program at Mirage. Do have sort of a minimum amount that you will drill? And also, could you clarify if all will be exploration drilling?
So the definition of exploration drilling is very vague. But I would say there's not a lot of infill drilling that's going to happen. All right, very, very little. It's not to say that there won't be, but if we're drilling anywhere, we think we're probably going to drill 3,000 to 4,000 meters at a minimum. If we're doing that amount, then we're talking about less than 10% will be in the infill category formally. I think there's a lot more that we can do on the exploration side. Now, some of this might the definition of infill is one that can be viewed in many different ways. There are areas where we have one drill hole and we want to drill around it. I mean, is that infill? Is that still exploration? I'll let you decide. But, there are a few scenarios like that where we are going to execute that type of program. But to go back to it, we're looking to do 3,000 to 4,000 meters. And we believe that there's a significant portion of it that is going to go towards just, and I'm saying it again, but I'll keep saying it, demonstrating the potential, showing to the market just how good this can be.
Excellent. Usually when companies put out a resource, they at least have are thinking about a PA sometime in the future. How are you thinking about that?
I mean, I keep going back and forth on it. If if me and the team believe that there's still so much upside to capture, and I put out a PEA that's only on 50%, 40% of the total potential of the asset, do I really think that shareholders are benefiting from that? They don't have a good idea of what it could be. The market doesn't know how big it can get. It's not to say that I'm not doing one, to be clear. That's not the implication. But I'm in no hurry to do one. First things first, again, demonstrate full value, which is our objective this year. And then once we feel comfortable with what we've done, which is going to be faster than what people, I'm not saying, in 5 years. No. We already know it looks good. We're already doing all of the background work that's necessary to show the economic value of this project, be it more metallurgical work, be it, environmental studies, be it whatever else that needs to be done. But before we knuckle down and start to do economic studies, we want to make sure that we're showing the best possible project out there that reflects full value. I don't want to say, well, the NPV is only $500 million, but it could be so much more if we came around and added all these extra 30 million tons we found. I don't want to do that. I want to show the full, complete project before I envision jumping into economic studies.
I agree on that. So you use for lithium concentrate 5.5%, 15,000 or $1,500 per ton, which is sort of what you see for many other companies in terms of resource and PEA and economic studies. Could you give us an update on the lithium market to segue into that and give us your outlook?
Yeah, look, I mean, first of all, first question there. We didn't want to reinvent the wheel. We didn't want to do anything fancy. We wanted to use what everyone else was using, right? If that's the industry standard, let's go ahead and do the industry standard. In our view, there's the lithium market is one. It's the sign of an immature market, right? The lithium price has rallied over 100%. And in this case, I'm talking about spodumene from its low to where it's currently sitting. It went down to about 500 and it's sort of, call it 600, and it's now sitting at almost over 1,500. Why? Because lithium demand never went away. So many people focused on supply, and they're not wrong by focusing on supply, by talking that there's a potential for oversupply, and there's a lot of lithium market material out there, be it spodumene or something else. But what they forgot to talk about is just how good lithium demand is. And that's what has caught people by surprise. Lithium demand grew very, very aggressively throughout 2024, continued very, very aggressively throughout 2025. I'm sure once we start to get the numbers for year end, we're going to see once more that lithium demand probably grew in the double digits, right? Point to me a commodity that's growing that fast. You're going to have a hard time. A lot of it is, it's the same thing again. People were talking last time about EVs, EV this, EV that. And it's not to say that EV doesn't play a role, but the lithium market is so much more than just electric cars, right? It's about energy storage. That's what it boils down to. That's what you're doing in your EV. You're storing energy. And one of the main things we're seeing is sort of this new wave of renewable energy, right? Be it solar, be it wind, but predominantly on the solar side, which have seen staggering cuts in terms of cost, right? 10 years ago, it used to cost 44 cents to produce $1 kilowatt of solar energy, all right? Now, we're down to less than a penny. That's an astounding drop, right? Over 98% drop in your cost profile to generating power. Some of the cheapest form of electricity out there. And once you know, it needs a lot of lithium to store the excess capacity you generate during the day to bring it to your peaks at, in the evening or at night. Well, not the peak at night, but you want to transfer that power during the night as well. So you're seeing such good demand from that front in so many different markets, not just in China, but across Africa, across Southeast Asia, across, places like Saudi Arabia, the Middle East, anywhere where the sun shines, there's free power or nearly free power to be collected. And if you have nearly free power to be collected, then there's lithium batteries right behind it ready to store it. So that's why you're seeing such strong demand growth. And the future for lithium is looking good. It'll trade up and down, but if you take a step back, it will consistently, in my opinion anyway, trade up. There's enough momentum to continue pushing. And remember, we put the easy stuff in production in the last cycle, right? The stuff that was quick to be done, whether in the Congo or Zimbabwe or Australia or China, that's all gone. We've already built it. We're already producing from it. So the next wave is going to have to come from places like Quebec, maybe places like Greenland, maybe places like Saudi Arabia. We'll see what we do over there. But that's where the next wave is going to come from. And it's going to be slower to extract material from there. It won't be as easy as building a mine in Zimbabwe. And that means that you're going to see a longer and higher price for lithium, which is perfect for lithium development or lithium exploration companies like Brunswick Exploration.
Let's move to what's your current financial position?
So right now we're sitting on over $3 million in the bank account. I mean, we're pretty happy with what we have. We have a small drill small. I mean, it's over 1,000 meters planned at Anatacau itself. We're not in a hurry to decide, what kind of program we want to do for the rest of the year. We do have plans. We are financed for a significant portion of those plans. But we want to make sure that we're in a strong, as always, in a strong financial position, that we're not afraid to do this ourselves, right? Finance it internally if the market conditions don't make sense. We want to grow the company. We are ourselves significant shareholders, right? You always remember, between board and management, we own over 55 million shares. That's a lot of shares that are owned by insiders. And we want to grow that. And we want to make sure that we don't dilute that position to nothing. So we're very, very careful in how we spend our capital. Even if we remain very aggressive, we're trying to make sure that as much of it can be used directly in the ground.
Excellent. So how much do you think you will spend on G&A this year?
On average, G&A for us is a little bit tricky because we're always growing the company. We're always doing wild and crazy stuff by adding new countries, which falls under G&A. But our G&A has been pretty consistently in the $1.5 to $2 million range. Some years is a little bit more if we're more active in terms of generating targets. Some years is a little bit lower. But, we try to make sure that no matter what, about 80 to 85% of the capital we raise goes into the ground. That's the most important way of looking at it.
Do you have any expectation on sort of, based on what you know now, some kind of minimum spend on exploration and other, project-related expenditures?
I mean, that's a tricky question because we can adapt, right? If we feel that the market conditions are not great, then we can do prospecting. And that's going to cost us $1 million, $1.5 million for the entire year. It's nothing. If the market conditions are good, I can go spend $15 million. Right? The reality is probably going to be somewhere in the middle, but we can select the amount that we feel is most beneficial to our shareholders and to the company's continued success, right? We can right size our budget to what we feel. So we have budgets for $1 million, just like we have budgets for $10 million internally right now. And it's going to depend on market condition. If market conditions are good, then we can spend a little bit more. If they stay weak or we are not confident or if the financings are too dilutives or we're not liking who wants to participate in financings, then we don't have to take the money. That's the fun thing. Again, it's about options. When juniors have options, they're not forced to do one single thing. That's when you know that they're in control. That's when you know that they're going to generate value for shareholders.
I mean, at some point this year, you will need to raise money. I mean, you're a non-revenue rating company. How are you thinking around the next round of financing? Obviously, it seems like at least that the market conditions are a bit better than last year, and also now with the resource, you have an anchor to your valuation.
Exactly. We have an anchor for the valuation, but take the example of last year, right? Last year, we were able to bring on, even in a bear market, tier one pension funds into Brunswick exploration. Why? Because we have a solid reputation. And it's going to be the same view again. It's going to depend on, who, what, and when, right? If we see a good share price, if we have good investors that want to participate, then yeah, we'll raise capital. If we believe that it's not acceptable or we feel that it could be a detriment to the value of the company, then I'm in non-stress. I am in no hurry. I'll wait it out until I find a better time or a better partner to align ourselves with. So that's where we can be very selective. Yes, of course, we're a non-revenue generating company. Of course, we have to do financing. Those are perfectly normal things for the exploration market. But we have that flexibility. We can choose the right moment that benefits not just Brunswick, but Brunswick and its shareholders.
So let's talk about Anatacau Main. You made a discovery there. Could you explain what have you hit? What's the significance of it?
Yeah, so I mean we've been talking about Mirage all this time, and we still have so much more we can discuss. And case in point, Anatacau Main. I mean, Anatacau Main is a fantastic asset. It's 22 kilometers away from a sizable Rio Tinto asset that's fully permitted, that we believe Rio Tinto will want to put into production. We actually drilled at Anatacau Main 120 meters at 1.31% lithium oxide. We announced this back last November. It was, funnily enough, the third best intercept in the lithium sector globally. All right. So it goes to show, the size and scale of what we believe we found there. We've only drilled 700 meters into it as of yet. We have a program to triple that amount of drilling, even more than that, starting in February. It's open. There's a lot of room to grow this. This is going to be a key asset. And again, it's right next to a future mine. It's the type of discovery on its own. I think it could be, I'm not saying company maker, but it would be something quite impressive. And that's discounting everything else in our portfolio. Just that single asset being right next to Rio Tinto affords us a lot of value in my mind. So it's going to be exciting. There's no way around it.
How would you say so far that your intercepts, if you compare them to the early stage Mirage?
I mean, it's different in the sense that this outcrops less, Mirage outcropped more. But it's not to say that there's no potential here. There's a lot of room for this to continue growing. Can it be as big as Mirage? I don't know. That's the work we have to do. But it sure looks interesting right now. Think of it this way. 22 kilometers to the west is Rio Tinto with the Galaxy asset. They have 100 million tons. If they can define 100 million tons there, who knows how much I can define here, right? There's a lot of potential. There's a lot of room to grow this particular asset in the coming months and quarters here, which again, that initiative starts next month. It's coming up fast. It's going to be really fun.
Let's actually now move over to Saudi Arabia. Could you tell us more about, you picked up ground there. Tell us more about that.
I mean, Saudi Arabia is very, very interesting. And it goes back into our strength. Brunswick exploration, more than anything else, is about making discoveries. And after working all of Canada, we said, what else can we do? Where else can we go looking? And the first place we decided was Greenland, right? That was our first move. And when we were successful in Greenland, when we made a discovery there and grew, the only known lithium showing in the country, controlled by us, by Brunswick, we said, look, This expertise that leads to discoveries doesn't exist in other companies. Let's go ahead and find some more. Where else can we go looking? Just because there's no lithium doesn't mean there's no potential for it. And one of the first places we identified was actually Saudi Arabia. We believe that there's a significant lithium potential in Saudi Arabia that is unexplored. And we decided to ourselves, well, let's do what we do best. Let's go ahead and look and identify targets across the entire country, which we have. And we hope to have boots on the ground by late March or in April and start doing what we've done in Canada, in Quebec, in Greenland, in Saskatchewan, in Manitoba, like in all of these different jurisdictions. Let's do it again in that country and see what we can deliver. Just takes one. I just need to make the one. And then again, we're off to making new discoveries and demonstrating the full potential of a new country.
How will the work program look like initially? How fast do you think it could take to define drill-ready targets? How long is a field season here?
I mean, that's a good question. Field season for us over there is probably the field season is year-round, to be clear. But
I know. It's very hot in the summer, but yeah, you can work.
You can work. Yeah. It's just you just need more water. But we estimate that we probably need about 2 to 3 months to test everything that we want in country. Maybe a little bit less than that. But it's cheap. It's some geos in a pickup, zooming around to all the different targets we've identified already through satellite imagery, through government mapping, through government databases. So it's something that is very, very efficient for us to do and doesn't require, months and quarters and years to delineate a target. So with a bit of luck, mind you, who knows, we might be in a drill ready stage in Saudi Arabia by the end of this year. That's how fast it can be. I mean, if you go back to even something like Mirage, when we first discovered Mirage, we made a discovery there in late July, early August. And by mid-September, we were drilling.
And also, it would be good to clarify, how much ground do you have in Saudi Arabia, and all of that 100% owned by you, or do you have JV partners?
So we have no partners as of yet. What we have staked is we have one license in the tender round in a particular area where we have identified a few targets. We have a significant portfolio outside of that we're not sharing too much information on because some of it remains unstaked. But we don't have to stake everything. Because we're so efficient and because we have an advantage over the competition, we can go ahead and test everything that we need to test. This is what we've done in Greenland. This is what we've done in Quebec. This is what we've done in Canada as well. It keeps our overhead low and allows us to stay very aggressive.
Yeah, I think that would be a good segue into Greenland. If you could summarize the past year's field season and what the results of that were.
Yeah, so the field season last year was really to better understand the discovery we made late in the year. So this would be 2024. So we had made a discovery there on literally the last day. We had found some lithium near the capital. We want to go ahead and we needed to better understand it. That's what we did in the summer of 2025. We've subsequently looked on the western coast. There's still more work that needs to be done on the east coast of the country. There's more potential there. But we have delineated what we believe is our best drill-ready target near the capital of Nuuk. And that's where it is right now. It now needs to be drilled. If everything goes well, we hope to drill it in the second half of this year, talking about late Q3. But we have to go ahead. We have a lot of other things to get to it before we can get to Greenland. As exciting as it is, it's not going anywhere. We're in no rush. And it's just a question of prioritizing not just capital, but also the team, right? We're only so many people. We're a big team, but we're only so many people. And we can't have everyone, all over the place, or else the quality of the work decreases. So we have to make sure that what we're spending on is not just judicious from a cash position, but also judicious from a personnel position. We want to make sure that we're putting our best foot forward. So we will absolutely get to Greenland. We hope it's in Q3, but it's not going to be an issue if it's later. We will get around to drilling that asset. That's what needs to happen there. It is drill ready to be done.
I think it would be good to talk about your overall strategy. By now, at least, the market knows that you are very good at making discoveries and also both in early stage and also advancing them. But you have a large portfolio in different countries. It's often hard to get full value or even get even close to that when I mean, arguably Mirage could be worth more than your entire market cap, which probably it is. So how will you unlock value out of that? Because even if you make a new discovery in Saudi Arabia or Greenland or advance Anatacau Main, it's still you will still have that issue probably.
Look, and that's a fair question. Sorry, a fair point, I should say. But my view is simpler.
I'm not saying it's an issue really, but you have to find a way to unlock shareholder value.
Exactly, but let's take a step back here, right? At the end of the day, my view is this is a global program, and it comes back to sort of the strategy behind Brunswick, right? If you remember, I'm sure we've spoken about this in the past, lithium exploration never occurred globally, right? And because we were in a bear market, all of the majors pulled out. I don't care who it is, they all stop doing exploration work. And that's normal. It's a bear market. You don't do exploration in a bear market. That's the standard things of doing. And what we said to ourselves, well, okay, if they're not going to do it, we'll do it. And we'll consolidate. This is something that you cannot do in other commodities, where I can say, well, I've done all of Greenland and there's nothing else but our claims that contain lithium in Greenland. There's nothing else of value in the entire country. We've tested it all. And now I'm going to be able to say that in Saudi Arabia by the end of this year. And I'm going to, looking at other countries, I might be able to say that about other countries as well. So that in a few years' time, maybe this year, maybe next year, maybe the year after that, when the majors say, okay, I guess I should do lithium exploration, it's too late. A little junior called Brunswick Exploration already did it all. Already found all of the lithium, the easy ones at the very least, that can be found across all of these jurisdictions. And that's something that's very unique that we're offering here. So yes, it's for sure. Some people or some investors may not fully capture the total value of my entire portfolio, but it's still an incremental gain. If I'm able to make a discovery in Saudi Arabia and I attract a major Saudi company that wants to either invest in Brunswick because I have a discovery there, or acquire that asset, or acquire all Brunswick and spin everything else out because they just want the discovery in Saudi Arabia, is that really a problem for shareholders? No, not really. So yeah, I may not get 100% of my valuation on every single asset, be it Anatacau, be it Greenland, be it Mirage, but I still gain all of them together, right? We're still stronger for having all of these assets together. So it's something that's unique. And the last thing I want is to wake up in 3 to 4 years' time and say, oh, look at this company. They made a discovery in this country, and I always wanted to go there. I knew there was something to be found, and we had identified targets, but we never did it because we were never going to get full value. That's never going to happen. Full value means making discoveries for Brunswick. As long as we're making discoveries, we're getting full value.
Could you summarize the catalyst for this year?
I mean, we put out a big one. We put out that resource estimate. But as I said before, now we're right back into delivering milestones to shareholders, right? Drilling starts next month. We start after that a prospecting campaign in Saudi Arabia. After that, we start back at drilling at Mirage. Then we're hoping to start drilling in Greenland. Maybe we make a different discovery in Saudi Arabia that we want to drill. We've already identified more countries that we want to be operating on. We see a future resource estimate at Mirage, either by the end of this year or into next year, again, showing just how much we can grow this resource. There is a lot of things that are going to be happening in this company between drilling, between discoveries, between consolidation. There is quite a number of things that we can do out there, all underpinned by real assets, real value creation.
Awesome. So with that, where do you envision Brunswick exploration at the end of this year?
Better be at $1, but no. Look, at the end of the day, I see Brunswick continue to execute, right? I want to point out to the end of this year and say, you know what? Mirage is now on its way to be even bigger than what we assumed. And now maybe Anatacau is going to be the same size as Mirage, maybe the same size as Galaxy based on our success. We finally managed to drill in Greenland. Now we have new discoveries in Saudi Arabia that we want to talk about. We have a new country that we're now working on. There's a lot of different things, but I want to be able, then we have this interview in January 2027, I can point to all of these different successes, right? And just have the most unique lithium, even just one of the most unique exploration companies in the entire market.